Hello everyone, welcome to my channel. Today I'm going to talk about how to pay your employees in your small business. Before I get into the video, be sure to subscribe and leave a comment below saying I subscribed. I will try to personally reply to your comments. Let's get into the video. Compensation for your employees may appear to be as simple as writing a check every 2 weeks, but there is more to it than that. Let's begin with the decisions you will have to make. To begin, you must determine the type of personnel you require. Are you looking for part-time or full-time workers? You will need to work out the best way to compensate that person once you have made that selection. Wages, the money or salary you give your employees, is referred to as wages. Depending on your pay period, it's a regular fixed payment made on a daily or weekly basis. Under the Fair Labor Rules Act, you must pay employees the federal or state minimum wage, whichever is higher. The federal legislation that establishes the minimum wage, overtime pay, eligibility, record keeping, and child labor standards for full and part-time workers. Stock option. Stock options are beneficial to more than just consultants and investors. Through a contract, your company can provide this choice to employees and contractors. Your employees can buy company stock at a grant price, which is a predetermined price. Commissions, because the amount you pay an employee is based on the quantity of work they complete, commissions are less predictable and they can be provided in addition to or instead of a salary. Commissions can be calculated as a percentage of a particular number of orders or sales. The FLSA does not require that commissions be paid. Insurance. A good insurance package can occasionally compensate for a low pay rate. Employers can help employees pay for health care by offering insurance funds. The two possibilities are a tax stipend or a tax-free reimbursement arrangement. Regardless of whether or not they acquire health insurance, employees receive a tax stipend from their employer. Employees' paychecks are augmented by monthly contributions from the company. At the end of the year, employees must fill out a form detailing the amount of their stipend, which they should report as income on their personal income tax return. In a tax-free reimbursement program, employees are given a set sum by their company to reimburse themselves for health insurance and medical expenses. When employees have incurred an eligible expense, they are given money. Employer provided workers' compensation is an insurance policy that protects employees who are injured on the job. Workers' compensation provides for an employee's medical care if he or she gets injured on the job. Employers contribute to state and federal workers' compensation pools to cover this cost. An employee pay cannot be withheld for workers' compensation insurance. Bonuses. Who does not want a little more money? A bonus is exactly what it says on the tin. Extra money granted to you above and beyond your wage or a typical amount of specified remuneration, you have the option of granting bonuses based on performance or at random as an employer. The next thing is, when it comes to determine how much to pay your employees, it should not be a guessing game. Job positions and candidate capabilities differ, but you can make an informed and fair judgment by considering a few factors and completing some research. Before meeting with a potential employee, write a clear job description that contains the particular skill the candidate should possess, as well as the experience you are looking for. Describe the critical tasks of the position. Use a few generic job titles as feasible. Keep an eye on your competitors as well. Take a look at what they are giving, not only in terms of pay, but also in terms of benefits and health insurance. Take note of how much a candidate wants and compare it to the normal remuneration for the position when you meet with them. Consider your budget and how much you can pay your applicant based on their experience and worth to your company, as well as what you have available in your budget and how much you can pay them. This is done by calculating how much money the employee could earn over the course of the year. Think about how much time they will save you and how vital their role is in your company. You could worry, am I financially capable of giving my employer a raise in a year or two? Consider how much money you want to invest in your company. You will need to set up a payroll processing system once you have decided how and how much you want to pay your employees. To get that process started, you will need the following items. If you do not already have one, apply for an employer identification number, EIN. The IRS can assist you with getting an EIN. This number can be used to file tax returns and pay employees for your company. It's also quite difficult to open a company bank account without an EIN. Double check that your employees' W-4 forms are complete. It will make the payroll procedure a lot easier. Also, make sure your pay periods are in sync with the IRS tax withholdings when you set them up. Create a compensation scheme for vacations, sick days, and holidays. Decide whether you want to do payroll in-house with HR software or outsource it to a payroll company. Visit theirs.gov for information on deadlines, which documents you should keep, and how long you should keep them. Make sure you are aware of the payroll tax deadlines so you can file your reports on time. Also, make sure you are familiar with your state's tax laws to ensure you are in compliance. Thanks for watching this video, and do not forget to subscribe to my channel.